G'day everyone, welcome back to Pete's Investing. Today is June 29, 2023. This is the New Zealand Canadian dollar currency update. On our weekly and daily, we're in a bearish momentum. And on our hourly, we're broken up into a bullish. But a couple of things to note here. We've got a couple of divergence on the daily and the hourly. I'll cover those in a second. So on the weekly, first off, all our indicators are downtrending. The triple moving average of the price chart, the moving average of the CCI 150, and the oscillator multiple moving average oscillator is also bearish. So that's primarily bearish trade should be taken if the weekly and the daily are aligned, which they are. So looking at the daily as well, it's a bearish momentum. So taking bearish trades only on the hourly. Now we do have a bullish momentum or divergence on the CCI. You can see there versus a flat divergence on the price chart. And that looks also like otherwise a double bottom. So we should see a probable bounce from here. Now for this to fail, we need to see the CCI drop below that point there. But at the moment, it's still in motion, and for us to then trade this, we need to then, we need to see a price break above this recent high, and then we're going to put in a Fibonacci retracement, which will probably be our target area. If we were to go long, I'll put the target area actually at that point there at the 61% level. So that'll be our target area at 83.29. So we need to see it break above this area, and basically what we do is we put a range within that divergence range, and we go to the highest point of that range, which is that 50% level. So that's our entry point, and that'll be our target area on the daily. So we may see a bit of reversal currently, depending on, and it's also bouncing off potentially this key support at 80.56. If I go to the hourly, a couple of things to show you here. Let me just go back. We did have a very minor bullish divergence there on that little CCI portion there versus a bearish divergence there, and that worked out. It broke above our entry point. If you draw an imaginary line there, I won't do it now. And our target area would have been the closest Fibonacci range from that high to that low. Now since then, the prices, so it's hit that point and it's bounced back down. And since then, the prices continue to show a bullish divergence until this point. And you'll notice where these divergences fail is when they drop lower than the opening area, which is there. So you can see there it's fallen below there, so that's no longer valid. That's in line with the price, so that invalidates the divergence. So we avoid trading that as a divergence. No harm done, because you wouldn't have entered into the trade. You would have had to have entered in. If it had gone up from there, you would have entered in somewhere up there, which it didn't happen. So it invalidates the trade. Now here, looks like we might have another bullish divergence. So we picked the lowest point. So it's probably from there to there. That's a bullish divergence. And you can see there that's pretty much another flat divergence. In fact, it's a bearish divergence. And if I move that, that's probably more accurate there. And I'll move that to that point there. Again, you can see it there quite easily. It's a bullish divergence versus a bearish divergence. And again, the way you trade this, you draw a channel between that range, bring it up to the highest point. So that'll be our entry point up here, and our target. So you'll bring it back to the lowest price. So assuming we enter there, our initial target area will be in that range there, the 50% to the 61%. That'll be our target if it breaks above this channel there. So I'll watch that, keep an eye on it and see how it goes. That's a potential trade for a bullish divergence. Also, we've got up here a back test, a bearish back test and a bullish back test. And so these divergences operate in isolation. They don't require the trend, the weekly and daily trend. But these back tests rely on the weekly and daily to be aligned. So you can see here they're currently bearish, and that's where you would trade the bearish back test when the hourly is also in a bearish mode. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in the next video.